Hi, I'm Sandy Ingram, aka C. Ingram, a registered tax professional with the IRS since 1999. Welcome to my channel, The Education Matrix, because education changes everything. I am a retired expat now in Acapulco, Mexico. Acapulco is a little dangerous, yes, but it's beautiful. It reminds me of Miami at 1/4 the cost. So there are lots and lots and lots of expats down here on the quiet. And we stay quiet because Acapulco can be dangerous. However, thousands of tourists visit this city every week. They arrive here from Mexico City on buses. So we all feel relatively safe. But that's not what this video is about. This video is about the few clients that I still have who hold Iraqi dinars. I am deeply concerned for them and for other U.S. taxpayers who hold dinars, and I'm going to show you why and how you can avoid tax hell with the IRS. Stay tuned. Okay, this is a page that you can go to on Google and find out exactly what the Iraqi dollar is worth up against the US dollar or any other currency. My concern is that the Iraqi dinar, you may wake up one morning and find it floating. Right now, it's not even worth a cent. But what if you woke up tomorrow or next week and it's worth 10 cents to the US dollar? Now, this is just scenarios. I only work in scenarios in order to teach taxes. I'm a basic tax instructor. I've worked for Jackson Hewitt and Liberty Tax, and I have students out there who are earning 50 grand and more a year part-time. So I know a little bit about taxes, but I will train you or teach you based upon scenarios. I'm not a financial planner. I am a tax professional. And until you give me tax documents or you turn it into a reality and I can put it up against the current tax laws, I wouldn't be able to tell you exactly what you might owe the IRS. But what I can do is give you scenarios. And I'm going to give you a really good scenario and an easy scenario. Well, why today you could be doing fine and tomorrow you could wake up in possible trouble with the IRS and how to get out of that trouble. That's what this channel, well, not the whole channel, but that's what this video is all about. Okay, here we are on the IRS website. Topic number 307, backup withholding. Now, in this scenario, you wake up and the Iraqi dinar is worth, let's just say 10 cents. It could be 20, 30, 40 cents. It could be $1. It could be more than $1. But let's just say it's worth 10 cents. You have 1 million dinars that you want to exchange right away so you can get your life on track. Or you have reasons that you want to turn in or exchange 1 million dinars. If it's worth 10 cents, your $1 million would be worth 100,000 US dollars. Now, at the bank's discretion, let's just say in this scenario that you go to the bank for your exchange rate and you exchange based upon the rate for that day. The bank can withhold a percentage of your monies. They don't have to ask you. If you look online, if you research online, you will find many, many people are complaining that the banks in the past are taking federal withholding out of savings accounts. So they're already doing it. So it wouldn't be a big deal for them to up their game and do it even more, especially for people who exchange Iraqi dinars. So that could easily mean if you have $100,000 that the bank could withhold, let's just say 25,000, 25% of your gain. Now, they would give you $75,000. Okay, that's all good. Oh, that's all good. No problem. It says here on the IRS website, when it applies, backup withholding requires a payee to withhold tax from payments not otherwise subject to withholding. So legally, they can do this. And I will put the link to this page below the video so that you can research it for yourself. It has a list here of payments subject to backup withholding. The bank can do this on their own, and they may have been instructed to do so already. We don't know. But what we do know in this scenario is that the IRS has now taken $25,000 of cold cash that we believe to be ours. Now, you'll say, I thought you were going to talk about IRS hell. Well, that is IRS hell. They took money from you. You've got to figure out how you're going to get it back. So that's what we're going to talk about in the next segment of this video. Stay tuned. Okay, there are any number of ways to get a percentage or part of your $25,000 back. But I'm going to talk to you about one of the best and easiest and cheapest ways for you to qualify to get more of that $25,000 back from the IRS. And this particular scenario only really applies to people or families who earn under $100,000 a year. If you earn over $100K, I recommend you to find a reliable and experienced and accredited financial advisor. If you earn under $100,000 and you don't have a lot of money to throw around, then you may want to take a look at this particular option. And what it is you own your own home, or you own a condominium, or you own an RV in the backyard, whatever it is that you own in the area of accommodations, you might want to position yourself to rent your property. And the reason is, hold on, let me get there. Sure, you are saying, I don't want to rent my home. I just bought it. Well, if you have a large home, you could rent a room and still get some deductions. The thing is, you must take action and put yourself or place yourself onto a tax savings form. And the easiest way to get there for you at this point may be a Schedule E. And then you can bargain, so to speak. With the deductions and the write-offs, you can qualify legally to get a percentage, if not all of, your $25,000 back. And let me say this to you. This is the very end of November, beginning of December 2019. On this day, you can purchase dinars between, $800 to $1,000 for 1,000,000 dinars. So let's just say you still have 1,000,000 stashed away. You've got money, you've got a cushion, you've got to think differently. You've got money now. So renting out your home may break your heart, but you want your $25,000 back. And the IRS they are more than happy to keep it.